to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hi, I'm Esther Gulius, the tax lady, and this is our hour to talk taxes and money. And several times during the year, we don't take live phone calls. We actually do an hour show, and we kind of chew up emails that you guys have sent us. And so this is that week, so we're not going to take calls this week, but next week we'll be taking your phone calls again. And, of course, during the week, if you want a tax question answered, you could be buying a car and wondering about if the sales tax are deductible, and you can go through your smartphone and email us, and we'll answer you right back in most situations. So there's that. And, of course, during the week, if you just want to stop in at the office, our corporate office is open at 2475 Niagara Falls Boulevard, 9 to 5, Monday through Friday. And then, of course, tax season, all of our branch offices are open, and we're open 9 to 9, Monday through Friday. And I'm joined in studio with Chris Fabian.
Hello, Esther.
Hello, Christopher. And Tiffany Fabian.
Hey there, Esther.
All right, so we're going to talk emails, right?
Yep.
All right, do we have some emails?
I got Jason. He said, Esther, I'm thinking of buying an existing business, an ice cream stand. What information should I get from them, and can you help me understand it? I know tax returns, but how many years? How many years?
He probably wants to know if he should get tax returns.
Right.
Well, first of all, when you're looking at buying an existing business, if you're dealing with somebody who says, here's what my tax return says, but there's money on the side that I didn't claim, if he would lie to the IRS, he would probably lie to you.
There you go.
So it's the first, if I would never buy a business and believe anything other than that's what's on the tax return. Because if you're buying a business based upon vacuous income that they say that's there that they're not claiming, how do you know this person is a liar, obviously, because they're lying on their tax return? So I would strictly look at what's on the tax return, number one. Number two, I'd look at 3 years and look at the trends.
Right.
Take a look at the gross income. Is it trending down? Is it trending up? Look at all the expenses.
Right.
And then you can see.
Are they working in it? Are they not working? And you could look, there's a line, salaries for officers.
Right.
I mean, if that's there and you're not planning on working at it, that's more expenses that you're going to have. That's
right.
not. So you got to.
And then again, plug yourself in. Let's say you and your spouse are somebody that says, well, we're going to work in this business, and they had wages. And you're going to replace the wages, and the wages last year were $25,000. You know that your net profit should be, all things being equal, $25,000 more. So there's all kinds of things, and part of what we do at EG Tax, you can bring in those tax returns, and we'll chew them apart for you.
That's right.
And like there could be depreciation of $25,000 or $35,000 on equipment, which is just a systematic write-off of an expense that may have been carried forward from a previous year. So those are things that we'll explain to you and help you in your negotiation.
And I think you've sent some people to a website. Is it like Biz for sale or business?
bizbuysell.com.
Bizbuysell.com.
BUYSELL.com.
Right.
And there are businesses for sale across the world.
Wow.
Which are existing businesses, and you can see what their net profit is and how much they want, and if there's an owner hold, so you don't have to come up with money. Several of my clients have bought businesses. They wanted to get out of Dodge. They wanted to get out of the cold weather in Buffalo, and they've gone down south, and they've been wildly successful, happy as clams.
Yeah.
Buying existing businesses, because at least you know it's an up and running business.
That's right. And the same token, if you're a business owner who wants to sell, it's a good option for you as well.
That's exactly right.
Yeah. Maybe you want to sell your business and get out of Dodge.
Right. I mean, so I would say probably at least 3 years worth of returns.
Right.
So you can see. I mean, and not just look at page one if it's a corporation of the 1120 or 1120S or this, but look behind it and see how much money they had to put into the company to get it going. How are they taking draws out? Are they, don't be afraid to ask them questions. How do they live? It's ice cream stand, okay? Normally, maybe April.
Ice cream here in January is pretty tough.
Right.
Pretty tough.
Yeah. So if they're open from April through September, how do they live October?
Right.
For the rest
Now,
of
by the same token, I had another ice cream business that was in one of the malls.
Yeah.
And they had it was obviously less during the winter, but because it was in a mall and ice cream makes you feel good and
Right.
it's full of sugar and, they actually had a 12-month business. So it all depends on where they're located too. And then you want to make sure if it's a franchise, what the franchise fees are.
Yeah.
How tied to the franchise are you,
Right.
So
So definitely give us a call. We'll go over everything with you. We want to make you successful.
right, that's for sure. All right, what else we got?
Greg writes in from Akron. Love your show. Never thought I would have to ask a question, but here goes. My daughter, age 34, and her 2 children are moving back in with us due to a divorce. She's going back to school. We are supporting her more than 50%. Can we claim her and our grandchildren on our return?
Well, maybe, because everything changes once a child reaches age 25, right?
Yep.
So even though he's giving over 50% to her total support, if she has gross taxable income,
Of over 4,000. Well, yeah,
3,900.
about $4,000.
Right.
if she has gross taxable income over her personal exemption, okay, then you can't claim her once she's 25. However, the children are claimable. But now here's the fly in the ointment. If mama and the children are in your house and mama maybe made $10,000, then mama's going to get the earned income credit, whereas you won't get the earned income credit. So it really becomes a numbers game. You got to look at who's bringing what money in. Now, if obviously, Mom, if your daughter has income of under $3,500, which is her standard, her personal exemption, then you can claim her and you can claim the children. But actually, she would still get the earned income credit if she claims.
Yeah, and another thing is she's thinking of going back to college, and so if she's claimed by somebody else, that might dip into her financial aid.
That's right.
And so there's so many variables that
Right.
you want to think
I mean,
about.
it just isn't the tax return. It's
Right.
the overall financial wellness of the family you have to look
Right,
at.
right.
And maybe the truth is, if her financial aid is going to be affected by her living home, she has to look at how much that is. Maybe she'd be better off in an inexpensive apartment, even if it's supported by mom and dad, because
Right.
it all depends on how much she's going to get for. If she can go to a $12,000 college for free, that's a big chunk of money.
Can we claim? And there's the grandchildren. I mean, that's these are the things that we deal with every day.
I mean, the earned income credit in her situation, if she's making like $11,000 or $12,000, could be about $5,000 that she'd be giving up. So, and that's a refundable credit plus her education credit
And the additional child tax
and the
credit
additional
and the New York
right.
State version of
Empire.
everything.
Right. I mean, it's a lot of money. So handling this improperly could cost $10,000, $12,000, not counting the financial aid.
That's right. That's right.
So,
I
all
mean,
right.
Yeah. And while I'm thinking about that, I had a client yesterday. I amended their return because they were a newly married couple and they filed married filing separate, but they both went to college. So neither they
gosh.
didn't get the AOTC or the lifetime
my gosh.
learning. So I amended their return and made them joint.
Right.
Yeah.
I'm Esther Gulias, the tax lady from EG Tax. We're here in studio this week chewing up emails. If you have questions that you'd like answered and you're too shy to call, you can get us through our website at egtax.com. We're going to break right now for a short break. We'll see you on the other side.
Now there was a time.
Okay, I'm Esther Gulias, the tax lady. We're back from our break. We're here chewing up emails. I got Chris Fabian, Tiffany Fabian. here with me. Of course, during the week, if you have any questions, you can email us through our website at egtax.com. Call us at the corporate office, 632-7886. You can text us while you're in the middle of a financial thing, and we will get back to you. I mean, we really want to help.
You know, what's amazing still is how many calls we're getting calls that people are saying, I'm getting phone calls from the IRS.
Which is not true.
Right. It's not true. And they don't some people just don't believe us that it's not true. But the IRS does not call.
But this scam is so effective because they call. My son-in-law called and said, Mom, the IRS is calling me and my wife, and what could you have done on my tax return? I said, nothing, Kevin. We didn't do anything. They didn't call. Yeah, we called back the number. I said, no, that's somebody in La La Land out there making some money. So just tell them, come on and arrest you. They're not going to arrest you because it's just a joke. But that's kind of what, if you don't pay us $30,000 in 15 minutes, we're going to come take your husband away.
I was on hold.
In some people's situation, they'd say, good, that sounds like a plan to me.
I was on hold with the IRS yesterday, and on their hold breaks, they had, now, if you get a call from the IRS, it is not us. We do not call. We send letters. And so the IRS is broadcasting it on their hold.
And speaking of that, if you do get letters, don't just pay it.
That's ignore the phone call. Don't ignore the letter.
Yes.
Right? The letter is really, really important.
Yep. Okay. I got a question for you. It's from Bob and Lisa in West Seneca. Esther, we are in the process of adopting a baby this year. It'll cost us around $20,000. If the adoption is final in September, do we have to wait until next year to claim him or her on our return?
Okay, you guys answer that. This is a happy.
No, you get to claim the child. Even if you adopted her on December 15th or December 31st, you get to claim her for the entire tax year of 2015. So the happy news is you get to claim her. And don't forget about the adoption credit.
Right. So if it is costing you $20,000, the adoption credit can be up to $13,960. Some weird figure out there. It's a non-refundable credit, but it will zero out your tax liability, turn your child tax credit to an additional child tax credit, plus the remaining will carry forward for up to 5 years. So you will eventually get back,
if you keep working,
a good portion of the adoption expense.
Yeah.
Right.
So
now, what if,
Special
this is what's
need.
really cool, what if you paid nothing for the adoption?
Well, if it's a special needs,
If it's a special needs adoption,
then you would get...
even though the child is placed by the state or federal government, they pretend like you paid the $13,960 or whatever it is, and they give you that adoption credit on money you didn't pay.
That's pretty good.
And a special needs adoption just might mean a special minority adoption or a special sibling group. Like, let's say that you take Johnny and Jeannie, who are twins. They don't want to split the children apart. And so you'd end up with a double adoption. Yep. So you'd have about $27,000 in non-refundable credits.
I mean, the age, if you adopt someone who's like
a little older child.
Yep, that's a special needs.
Right.
Mom might have been doing drugs.
That's a special needs
That's
child.
a special needs child. So there's a lot of things out there, but you got to get the documentation from the state that it is a special needs.
Usually, if it's paid for by the state, it'll be a special needs adoption. Right.
Pretty cool.
Yeah,
Pretty
it
cool.
really is. So that's congratulations on the. It's so hard to adopt a child anymore. You know, there just aren't very many of them, but. It's a wonderful way to, number one, increase your family, and number two, they're going to help you out with the expenses.
It's a beautiful thing. It's a really good thing.
Now, it's a little different if it's a foreign adoption, right?
A foreign adoption.
It's not deductible till the year the adoption becomes final.
Which means, so let's get the name. Bob and Lisa, say your adoption got delayed. You gave the $20,000 this year, and the adoption didn't get finalized till March of 2016, you can still take the adoption credit in 2015 because you paid the money. for a U.S. baby.
Right, but not on a
Not
foreign,
on a foreign.
on a foreign
Yep.
adoption. Chris saw me shift my eyes. Yeah, because I wanted to clarify that. If it was a foreign adoption, then you have to wait until the adoption is final. On a U.S. adoption, it's when you paid.
Right. I had a client once. They were in the process. They were adopting a 8-year-old, and for some reason the adoption fell through. But they still gave all. They were still able to claim the adoption credit because it was a U.S. baby, and they paid the money, so they
Right.
were still able to use a
Right.
credit, even though unfortunately.
And if you hear when you're listening to us, if you hear us say stuff and you go, "Oh, I didn't know that. Oh, we didn't do that." If it's within 3 years, we can amend the return and get you that money back. So and the other thing is that couple that's doing the adoption credit, if they have that $13,000, almost $14,000 credit, they
withholding.
should change their
Yes.
withholding because
Yes.
you certainly don't want to have them take money out of your paycheck when you're not going to pay any taxes this year or very little.
Exactly.
Okay. I'm a business owner, and right now many of the people who work for me are paid on 1099s. They all sign contracts that they are self-employed. Am I okay? They mostly do outside sales and get partial commission.
Well,
what do you think?
Well, the truth is, the IRS has strict guidelines on who is a self-employed person and who is a contract person and who is an employee. And so there's litmus tests that you have to take. And so if you are telling your employees when to come, when to go, what jobs to do, the guidelines, if you give them a desk, if you give them a place to work, that means these are some of the parameters that mean that they are actually employees and they're not self-employed. And so if you're self-employed, you're paid on a 1099. But if you are an employee, you should be paid on a W-2.
And then how much trouble is this?
Huge.
Yep. Because
Huge.
you're not paying your state unemployment.
Yep.
You don't have any workers' comp. Workers' comp will just kill you.
You'll be shut down.
Yeah. I mean, so it is so tempting to say, oh, let's just do it this way and I'll give you the 1099. And it all works out great until you get caught. Once you get caught, your life is ruined. I mean, it really is. Your tax life is ruined at any rate. So there are common law employee rules. Now there are also exceptions to common law employee rules for people that are self-employed.
Right. If he was strictly,
On
if their
commission.
pay was strictly commission-based.
On an outside sales.
On
person.
outside sales, and they got their own leads, they set their own time schedule, they did whatever they want, then that's fine.
Like a realtor.
Yes.
Right?
Yep.
I mean, like a realtor. A realtor has their own license. They have to pay for their own education. They have to drive their own car. They have to do their own advertising. That is not an employee. They are self-employed.
Right.
Or if you have, maybe you got a newspaper route and you're delivering Buffalo Newses all over the place. That's a self-employed because you're driving your own car. They don't tell you what. You can substitute who does the work. You're self-employed.
Yeah, I told you this before, Esther. I was listening to Public Report because I'm in my car quite a bit, and I was listening to the Uber drivers. Uber drivers, and the Uber drivers went to court, and they said that they are not self-employed, like they're paid.
That was in California.
Right.
That's crazy.
Okay, right. And so, anyways, you really want to make sure that you know what you are.
I read that report too. So an Uber driver, there are no Uber drivers in Buffalo, by the way, but we've been places and there's Uber drivers every place else, but in Buffalo, and I don't know why, because I think the unions are so strong here. But anyway, an Uber driver is somebody that signs up that says, I'll drive people around like a cab. And so they have an app, and when somebody's at the airport at another city, they have an Uber app, and they press on the Uber app, and the Uber app says that I need a ride, and the Uber driver says I'll pick you up, and they put you together electronically. There's no money that changes hands because it goes from your credit card to the Uber driver.
And it'll tell you they're 2 minutes away, they're 1 minute away.
And the thing is, so in California, they were saying that they were common law employees. I think they're going to appeal it because the Uber driver is completely independent. He drives his own car, pays for his own insurance, and in that situation, I think they are self-employed, but California being California, and the liberal state that it is, ruled against the Uber drivers. So
Yeah, and then also it's really attractive to think to yourself, I want to pay somebody on a 1099 because, the truth is when you are an employer, the Medicare and the Social Security, the whole burden
The
falls
workers'
on
comp, the unemployment.
everything shifts to you, whereas if you're a 1099, everything, you don't have to pay that half, and so it's really attractive. But as Esther said, when it's all settled and if they come knocking on your door, the
and God forbid,
repercussions.
God, you would never want anybody to get hurt in your business, but let's say one of these people driving around gets into a car accident and he can't work anymore and he goes to unemployment and says, I'd like some unemployment or workers' comp. And they say, well, and he says, well, I went for this work for this guy. And then they come to the guy and the guy never had anything. They will retroactively assess this person who was issuing the 1099s and cause them all kinds of penalties and interest. So, and pretty much like you were saying, they shut down the business. So that's what happens unless he can come up with the money, right?
Yes.
Right. Okay. I'm Esther Goulias, the tax lady from EG Tax. This week we're not taking live phone calls. Next week we will. If you have any questions and you want to get us through our website, it's at egtax.com. Anytime you can call us at our corporate office, 9 to 5, Monday through Friday, at 632-7886. We're going to break for news. We'll see you on the other side.
From the WBEN newsroom, I'm Sloan Martin. Here's what's happening. 10 years ago today, Hurricane Katrina slammed into New Orleans. The storm led to more than 1,800 deaths and caused roughly $151 billion in damage. The flooding devastated the city's Lower Ninth Ward neighborhood, but Burnell Colton stayed behind, opening the Lower Ninth Ward market when the area had been all but abandoned.
I'm just an average guy with above average dreams, and my dream was to make my neighborhood look like the rest of the city.
Locally, the Seneca Buffalo Creek Casino will soon undergo a $40 million expansion. It'll become a 2-story facility to include more gaming space, a non-smoking area, and a steakhouse. Expansion will be completed by 2017 with 300 more jobs. New York State is changing school immunization requirements to ensure children have had 3 standard vaccines before entering school. Beginning September 1st, students will be required to be vaccinated against measles, mumps, rubella, polio, and tetanus, diphtheria, pertussis. I'm Sloan Martin, News Radio 930, WBEN.
Back from the news, we're here in studio with Chris Fabian, Tiffany Fabian. We're all from EG Tax, and we want to help you. If you have any love letters from the government you haven't filed, or anything like that, if you have any kind of tax question, financial question, you're wondering about if you're a small business owner, what you should do to reduce your tax liability, especially now with all the penalties for the health insurance, if you're a over 50 employee, full-time employee equivalent. EG Tax wants to help you if you are somebody in need of health insurance. We have our very own navigator. We're very blessed to have Tim as our navigator. We can help you if you had a special situation to help you get insurance. We don't make anything off of it. We just want to help you. Think of us as your family. That's
Yep.
saying, everybody come join our family. We're all here to help you.
Yeah.
Right? All right, so we're doing emails today. What else do we got?
I got Doug. He says, Esther, what is the difference between a repair and an improvement? My tax guy keeps saying everything I do to my rental is not an expense. Am I spending money foolishly? And so the answer is when you are doing items to your rental, you can either do it as a repair or an improvement. An improvement doesn't keep things in the same avenue. It improves it. It makes it better, like a new countertop, a new bathroom, a new tub, a new flooring. Now, a repair just repairs something and maintains the current status quo. And so that's what he's referring to. And so if
the write-off is handled differently on
right,
the tax return.
That's right. That's right.
So a repair is what?
Expensed right away that year.
So like if you paid $1,000 for painting, which is
doesn't add to a useful life.
That would be an expense. You get to write it off.
Right.
But if you put new siding on the building, that improves. It has a useful life of more than 1 year, and so you have to depreciate it. And depreciation means it's a write-off every year, a little teeny bit every year for, in the case of siding, how long would it be?
27 and a half years.
So he's not spending money foolishly.
Right.
Right.
Well, and then the other thing, if he's just spending money for a write-off, that is foolish.
Correct.
And so anybody that just spends money to write it off, that is ridiculous. Like, for instance, I'll give you a for instance. What if I called you, Chris, and I say, hi, I'd like to increase my itemized deduction so I have my brand new Lincoln. I'd like to give it to the Red Cross. What would you say to me?
I'll take it. No, it's okay. Well, how much is your Lincoln worth?
I paid $40,000 for it, and it's probably worth $35 now but I need the write-off.
Okay, so if I would ask you your income, figure out your tax bracket.
Let's say I make $100,000.
Okay, single, married.
Married.
Okay, so after deductions, you're looking at the 15% bracket. So 35,000 times 15%. Is
I would use wrong figures, wouldn't I, Chris?
Yeah, 40,000. So you're looking about a $6,000 savings on your tax return.
So it's $5,250. So effectively, and with the state of New York, it's about $6,000. So effectively, I'm giving away a $35,000 car that I could sell for $35,000, but all I'm saving is $6,000 in taxes.
Yep.
Duh.
No
right?
brainer.
Yeah.
Let's do it. No.
I mean, that's what happens. Many times people want the write-off, but they don't understand that the write-off is multiplied by your tax bracket.
Yeah.
So in this case, this guy that's giving, it's true, he has a $35,000 write-off multiplied by 15%. So he's only saving with the state and federal about $6,000. And so I say to them, would you sell me your car for $6,000? And they say, no, it's worth $35,000. Well, that's what you're doing.
And actually, it's not what it's worth anymore. It's what the company you give it
that's
to,
true. Sells
if
it
they
for.
sell it for at an auction, so you have to wait maybe a year to get
Unless
that
they
charity
use
rate,
it.
or unless they
But
use
if
it,
they'd probably
and then
use
they
the-
have
they'd
to
probably
get
use
a
the
Lincoln.
Right.
But they would have to get it appraised and mail you an appraisal
Right.
for your tax return.
And then I also want to add into Doug's comment about his rentals is don't forget when you go to sell the rental, anything that was an improvement that's being depreciated, you have to recapture that depreciation when you go to sell it. So you want to make sure that you keep that tucked away in the back of your head is so it could cause a capital gain because you're going to recapture and add back all that depreciation.
Right, but it could also help him too, because say he put in windows and siding on his house and it cost him $25,000. That added to the basis. So if he bought the house for $100,000, now the house is worth $125,000. So if he depreciated part of it and then he sells it 3 years later, that $25,000 may have only been depreciated
$3,000.
$3,000. Right? So he still has $22,000 in his favor to the asset
to reduce the
capital gains. So yes, there could be a tax from the recapture of the depreciation, but it could also help him too.
Right, because the basis hasn't been all written off.
Right.
But if the basis is written off, then
then he's got
right?
it.
And then he might look at a 1031 exchange.
That's right.
Right, which is a tax deferred exchange. So if he takes this house that he had rented out that might be fully depreciated, he can exchange it for another one. And it's interesting because Russ Gullo has been on our show before, and he's an exchanger, a qualified exchanger. And so it's great if you're somebody in Buffalo with rental property and you say, I want to get out of Dodge, I don't want the cold weather anymore, and you want to go do the same thing in Florida, you can actually sell your houses in Buffalo, use an exchanger, and have the exchanger actually get you the houses in Florida, and it won't cost you anything. The basis on the old houses goes to the new houses.
Yeah.
Yep. Yep.
I hope
And
so.
again, EG Tax will help you to do that. So
Pretty cool.
another thing, right? All right,
Pretty
what else
cool.
we got?
Emily writes in, Esther, I have been living in Toronto for 8 years and have not filed a U.S. return since moving.
Mamma mia.
One of my friends told me about an F-bar. What is it, and can you help?
Wow. Well, so
Well-
is she a U.S. citizen? I've been living in Toronto
Yeah,
for years. and
you'd have to
a
first
US
say, are you a
return.
U.S.
US
citizen?
citizen.
Right.
If this girl is a U.S. citizen, which we're assuming, that's why I was so, then when you're a U.S. citizen, you're taxed on worldwide income. Assuming she's not in Toronto living under a bridge and she's working,
Right.
then she would have income. She would have had to file a Canadian return, and likewise, she'd have to file a U.S. return. Now, for those of you out there saying, oh my gosh, that just seems like a travesty. Well, first of all, when she files her U.S. return, if she has income earned abroad, which Canada would be, and if she was out of the country for 360 days
Consecutively.
right, then she'd be able to exclude almost $100,000 of her Canadian income on her U.S. return when she files, and so she may not have any liability. And if she did pay taxes to Canada, if that didn't wipe out everything,
yep.
she'd have foreign tax credits. So she has to file a tax return. She also has to do an FBAR, which stands for
Foreign.
Oh my God, financial banking account reconciliation, or foreign banking account reconciliation.
And then, so the caveat with that is she has to have assets, money of greater than $10,000
at any time in a foreign country.
Right.
And even though we don't think of Canada as a foreign country,
It is.
it is.
Right.
Yeah.
And now for Emily, what can be done, since I take it she hasn't done any of this, there's called a streamlined procedure. So what we need to do, believe it or not, even though you haven't filed for 8 years, is only file 3 years worth of returns. So we would go back to 12, 13, and 14, do those returns, and do 6 years worth of F-bars as long as you had $10,000 or more in foreign assets during
She
those
didn't.
years. Then there's nothing
She doesn't have to do
then
the
she's
FBAR,
fine.
but she still has to do the U.S. return.
Yep.
Right?
Yep.
Wow.
So, I mean, you give us a call. You know, we emailed you already.
And if you're one of our brothers and sisters in Canada and you're a U.S. citizen and you've been up there married to a Canadian and you just said, oh, I never knew I had to do this. It's a big deal because the penalty is like $10,000 a year on the F-bars.
You just helped a mom and her daughter in Canada, right?
Yep, and
yeah.
they had no clue. I mean, it happened. I mean, I tell all these people that come over to do this is they went fishing for marlins, that super big prized fish. And what they're getting is all the guppies. They're getting all these small people who
who are
Yeah.
trying to be compliant.
Yep. And
Yeah.
so
You mean the IRS?
The
ones,
IRS.
Right.
yeah,
The federal
the
government.
federal
Yeah.
government.
I hope they get some marlins and stuff them and put them on their
Well,
wall.
I think that they are getting some marlins, but, you know.
Yeah, in your net.
And the bottom line is they want to know where U.S. income, U.S. taxpayer income is.
Yep.
If you timely file your FBAR, it's not like there's a tax.
No, there's no tax
There's just a
implications.
penalty if you don't.
Yep. And it's
So-
due by June 30th. So if you haven't done it, it's late, but we can get you in
Right.
and still do it. But
Better late than never. And the other thing is, there is like an exception, which basically says, like, I didn't know.
Right.
And from everything I've seen, that they've been pretty good about that, believing that you didn't know.
Yep. And I know there's been people who say, well, I'm going to relinquish my U.S. citizens because it's citizenship, because it's not right that I'm getting double taxed. But really, you're not getting double taxed because there's a lot of different caveats
But
to
by the same token, if you are somebody that's tightly related to another country and you do feel strongly opposed to this, you can relinquish your U.S. citizenship.
Yeah. I know someone told me that it used to cost $500 to do it. Now it's up to $2,000, and it's over a year wait. That's how many people are doing
Giving
this,
up their
Giving up
citizenship.
their citizenship.
Okay, what else we got?
I got a long one, but maybe we can carry it over after the break. Esther, my mom just passed away in March, and now I have her paperwork. Then I know what to do with it. Most of her money was in the stock market. What do I need to bring in to get her taxes done? Also, I received $75,000 from a life insurance policy. Is that taxable? What about the money from her checking and savings?
All right, so assuming that she is the heir, right?
Yep.
And she got life insurance on a death benefit, how much would that be taxable?
None of it is taxable payable upon death. None of the life insurance.
So that's good news. How about the
Money from the
checking account?
Cash money is not taxable
Because it's already been taxed.
That's,
Right.
I remember you taught me one time ago, think about it in your head. Has they already been taxed? And so that's
Right,
already
it's
been taxed.
As long as it's been taxed. So
Right.
all the money that hasn't been taxed would be the stocks and bonds. And if the daughter's name was not on the account, if the daughter inherited it, then she'd get a stepped-up basis, the fair market value at the date of death. And with that, we're going to break. We'll see you on the other side, and we'll finish the story. Today, so we're not taking live phone calls. We will next week. Of course, if you have, this is our little, I wanted to make sure everybody understands, if you have anything that happens during the week, anything unusual, think of EG Tax kind of as your partner or your family member. We certainly we would rather help you to make sure that it's done correctly, and for any tax question, there's no charge. The only time that there's a charge is if we actually physically do some work for you, so you can use us as a resource, and we really want to help you. Okay, so we're going
back to Maria.
Maria. Okay.
Problem with Maria. Easy problem, Maria, though. Don't worry, we can solve it. Your paperwork you would need to bring in, you would get a 1099 DIV for dividends off of the stocks. And if you sold any of them, it would be the 1099B for sale of stock. And like Esther said, since you inherited it, you would get a stepped up basis for the date mom died. So there may be a little bit of homework. Not much. We can help you with that.
Actually, and if you look at Yahoo Finance, you can get the fair market value at the stock, the date of the death of the decedent, and so it's very easy to do.
Just
Yahoo Finance, I'm sorry, Chris, is a great tool.
Yep, yeah.
It's a great tool.
Yep, I use big charts. There's a lot of them out there you can use, but you can get any date in history you want to see what a stock was worth.
Right, and then the other thing is we were talking about the girl from Canada. Whenever you're doing a taxpayer who earned income outside the United States, remember to convert it to U.S. dollars. Yep. For instance, right now, the Canadian dollar is worth almost 28 cents less than the U.S. dollar. So if you had $100,000 Canadian, effectively U.S., it'd be more like 72,000. So you want to make sure you're doing apples to apples.
Right.
And again, using Yahoo Finance Currency Converter, you can do the conversion specifically at each date. They'll have the whole thing worked out for you.
Yep. And then also for Maria, these forms that you'll get for the stocks, they're not due by January 30th, like the normal W-2s. They're supposedly, and I use the word supposedly loosely, due by February 15th. But then most financial firms get an extension, which make it to end of February, middle of March. And then you may get it, and then there'll be corrections. So don't rush in to get the taxes done right away. Just wait, be patient a little bit.
Because you might get a corrected 1099, right?
Yep. We had someone come in this week, unbelievable, inside their 1099 package, there was a little asterisk with little fine print. The K-1 will come later by April 15th. They just got the K-1 like in the middle of July.
Yeah.
I mean, they were so upset and they were blaming us. I said, it's not us. I mean, we did you a favor by filing your return.
Because then it wasn't late.
Yeah, you owed $30,000. So the 5% penalty per month, you're looking 4 months. We just saved you $12,000.
Unless we did an extension.
An extension. But they had no idea there was a K1 coming. We didn't even, so just be patient and we'll help you along the way.
Right.
That's the best thing.
Okay, what else we got?
Let's go to Jody in Williamsville. I have been doing a lot of work for my kids' hockey teams. I'm the manager, and I don't get paid for it. Someone told me I can use my mileage as a charitable deduction. Is that true? I drive around 9,000 miles a year for
bet
this.
you she does. As long as she's the official
Manager.
right, official person with the team,
Yep.
and it's a not-for-profit,
Yep.
right? Then all the expenses that she would incur, which would include the mileage, and maybe she's got to get equipment and her skate.
Yep.
She's a hockey
Manager.
manager. Does she have to skate too?
Doesn't have to skate. Probably not, but she puts together the tournaments, maybe her hotels, going to tournaments, maybe
And
she...
again, it has to be ordinary and necessary.
Ordinary
so she
and
can't
necessary.
stay at the Waldorf
Right,
and
right,
write it off. But
right.
if she's over at the Red Roof Inn or something, right?
Yep, the Fairfield Inn or
Right. You
something.
want to make sure that it's not extravagant,
Yep.
and it's ordinary and necessary. So she's not going on. She's not saying, I think we're going to Atlantic City on a tournament next Saturday. We'll go Monday and we'll scope it out. I mean, it's got to be.
Yep,
You
yep.
know, it's got to be actually as a volunteer. But
Yes.
all of that's a charitable
Right.
deduction.
And so 9,000 miles, okay, it's 14 cents a mile, so you're looking 900. You're looking about a $1,300 write-off for charity just for mileage.
And then she gets the tolls.
the tolls,
Parking.
Yep, everything and anything. So maybe it comes up to about a $2,000, $2,500 charitable write-off for you for the year. That's a lot of money in your pocket. 2,500 times 15%.
Right,
That's about
400
$400
bucks, yeah.
Times that by 3 years if you've been doing it for a while.
$1,200.
That's how
So,
much do you
and then
pay
they'll
for
pay
hockey?
you with interest, which
Yep.
is not a lot of money, but they will pay you with interest.
Yes.
Okay.
Yep.
Okay, that's a good one.
Yes. And then we have Justin writes in from Hamburg. I'm in the process of looking for another job. My search now is in North Carolina, South Carolina area. Can I write off my airfare and hotels? Is there a limit? How about anything else I can write off?
Well, pretty much. It's almost like what the lady did with the hockey stuff.
Yep.
Everything that's ordinary and necessary for her to be a hockey coach would be deductible as a charitable deduction. Anything that's ordinary and necessary, job hunting, right,
Is a
would be a
deduction.
business,
Yep.
employee business expense.
Yep.
So he would put that on a 2106. What could he write off? Headhunter fees, education, job-seeking expenses,
Resume
airfare,
service.
resume.
How about if you're going down there, you're flying, how about your rent-a-car or your taxis?
Right.
The gas for the rent-a-cars.
Right.
All that goes into it. So
Right. Your resumes, if you haven't done professionally, all that's all deductible. Again, you want to make sure you save all your receipts. You have to make sure that it's ordinary and necessary, just like I said about the lady extending her out-of-town expenses for personal. If you, let's say you're going down to Orlando, and you just are bringing your kids and you got the job interview on Friday, but you're there on Sunday, Monday, Tuesday, and Wednesday and Thursday, those 5 days would not be deductible. The airfare for you would be deductible, and your 1 day room and meals.
Yep.
But the others would be personal.
keep track of everywhere
Everything.
you went. Get business cards.
That's right. And then the other thing is, if it's a trip to Orlando in February, all right, and you're there for a week and you don't know who you really talked to and you went and picked up a newspaper, really, the IRS who's freezing the guy, auditor is freezing too, they're going to say, you're just scamming the system. So you want to make sure that you know who you talked to. Going down to pick up a newspaper doesn't fly. I mean, you can pick up the Orlando Sentinel online,
Yep.
right? You don't need to go there.
Yep. Oh, that's for sure. So you got to be careful. Have all your ducks in a row.
Right. So that's
Okay.
good. And again, it's on the 2106
2106, subject to 2%.
limitation
Yes.
of your income.
And also the mileage, where we said the mileage was 14 cents for charity.
Charity.
This is work, so now you're at 56 cents
Right.
a mile. So it's a
big difference.
Big difference.
Right.
Yep. So now Bill writes in, I just won $5,000 at the casino. Can I deduct my losses from the income and put the difference on line 21 of the 1040?
No. Line 21 is where the 5 goes, and the 2% And the itemized deduction is where you're going to put your gambling losses up to your income, not subject to 2%. If you are an itemizer, now here's the rub. Many times it's seniors that are gambling and they can't itemize anymore. And unfortunately, the $5,000 goes in on line 21. It makes their Social Security more taxable, and they aren't able to write off the expense. So it's a sad thing.
Oh, I still remember I had one, the son won money like at a OTB and said, Mom, you don't pay taxes, you don't pay as much in taxes as I do. Can you cash this in for me? And he didn't even give Mom any money, and it cost Mom $2,000
because her Social Security
because of her Social Security became taxed. Didn't have write-offs. Didn't have. Yep. So you got to be careful. It's nice to be nice to your kids, but you got to watch it.
Make sure your kids are nice to you.
Yeah,
right.
Definitely.
All right. What else we got?
Every year I get letters from the IRS, and I just pay them. Now I'm getting letters from New York. Do I just pay them also?
Wow. So what happens is the federal government lets the state know that there was an adjustment because the federal and state piggyback off of each other. So if in 2012 you had a liability to the federal government, you paid it, they then let the state know. And many times the state doesn't come after you for a number of
2.5 years.
Right. If you paid the federal liability, you are pretty much stuck unless that year is open to amend on the federal. Then it would relieve you of the liability on the state. But if you paid the federal and it's now a closed year, you are in deep doo-doo.
Yep, because you can't even change it to affect the state, so you get stuck paying the state too on money
So that just goes back to the same thing we say all the time. When you get a letter, please call us. We will not charge you to look at the letter. Many, if not most of the letters are at least partially wrong or totally wrong. And with correcting the return, we can get rid of that liability. If the liability is then not assessed on the federal, they will not let the state know, and you will not get the bill. If you pay it, you are basically saying you are correct, and the statute goes on from there, and you have just shot yourself in the old foot.
And, I know we're running out of time. If you did an amended return right now and you mailed in the money and you get a bill and it doesn't make sense, probably because they didn't process the amended return yet.
Right.
Give us a call. We'll make a group call together.
Okay, well, I'm Esther Gulias, the tax lady, Christopher Fabian, and Tiffany Fabian from EG Tax. We're here to help you. If you need help during the week, you can visit us at our website at egtax.com. You can call us at 632-7886. And more than anything, think of us as your family because we want to help you. So until next week, I'm Esther Gulias. I'll see you later.